Let's find some option swing trades. Hello, traders. It is Wednesday evening, August 12th. That must mean that it's time for our weekly swing trading video. I'm not going to do any market fundamental analysis. If you'd like that information, please read my morning comments that come out before the open. You'll have all the information you need. I'm going to try and shorten up these videos. Let's do some technical analysis on the market. Let's put up our major moving averages to see where they come into play. There's the 200 and the 100. Let's also drop an alert line. I've been preaching to you in the chat room. Alert lines are an incredible tool. And every time you look at a chart, especially when you see a nice, tight trading pattern, you should be dropping these alert lines because when they're breached, there's going to be a significant price point that has been breached, and you want to know when that happens because there's going to be a trade that sets up well for you. In this particular case, let's set up a GTC alert. There are two types of alerts. One just says alert. That is for a day. It is only good for that day. It will disappear if that price condition is not met during the day. GTC, that will be live until that price condition is met. You would select a low end of a candle for an upward sloping line, and you would want to pick one that is somewhere at a low like that. And this would make another good candle that you can connect to. So you would click on the bottom of that candle. Now this will auto extend. If I go into a different time frame, you'll see that that has auto extended, and there's your trend line right there. So as long as we have this trend line intact for the SPY, you have to be long. You cannot be short. Now it is coming into play somewhere around the 325 level, which is right around that top right there. Let's put a crosshair tool. So as long as we've got this price point right here, this upward sloping trend line intact, you must not short. We are in a 10-year bull market. We are in a 4-month bull market. These bull markets die very, very hard, so you do not want to be early with your bearish trades. Now, if we start seeing late day market selling with closes on the low and follow through the next day, same pattern the next day and the next day with a breach below this upward sloping trend line, a breach below this horizontal resistance, which is now support. 325 is the magic number. Aha! Now we have a reason to get bearish, but not until we have that technical breach. So we need to focus on the long side today. Well, how could I plan for this if I feel that there is a market sell-off coming? What can I do, Pete? If I'm not supposed to put any trades on, what should I do? Well, you want to be looking for really tight price action. And that question came up today in the chat room. Well, what does that mean? This is nice, tight price action. See how orderly the candles are? Just drift higher. As I come up to charts tonight that have a nice, tight trading pattern, I will point them out. In essence, it means orderly. I can predict where this price is going. It's not herky-jerky all over the place price movement. It is nice and orderly. And when you have nice, orderly price movement, that makes these trend lines, these alert lines, even more significant and even more powerful. Why? How does that work? The same reason that major moving averages work. The same reason that the market bounced off the 200-day moving average here. The same reason that the market bounced off the 200-day moving average here. Because traders see that. They lean on that. They recognize that this is a natural support area. It's the same way with a nice, orderly, upward sloping chart. As soon as that upward sloping trend line is broken, boom, boom, traders see it. They trade off of it. So it's a self-fulfilling prophecy. So the easier it is to identify these upward sloping trend lines visually, the more powerful they will be when they are breached. And you turn on your computer one day and then boom, 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 boom. You've got 4 alerts waiting for you. Market is selling off. You've got these upward sloping trend lines drawn. And now you're getting alerts and you're being identified, or you're being aware of conditions that are changing. Today, I had a classic example on LRN. I had mentioned to everyone this morning, I said, I am going to drop a horizontal alert line, and I can't draw it now because that price point has been breached, but I will find one that I can draw. Actually, I can draw one back here. If I want to draw a horizontal alert line, I find a low candle like this one, and I double click on that low, and it will draw a horizontal alert line. That's what I did this morning. I noticed that there was a very, very tight price compression, and it had earnings after the close yesterday, which, by the way, I'm getting a lot of requests. Pete, if we're a little bit slow right now and you don't have a lot of trades, that's okay. Show us how to use Option Stalker to find trades. So that's what I'm going to be doing tonight, and I'm going to show you those two trades also. But let's continue with this lesson on alert lines. So let's say that this is a really nice horizontal support level that I want to lean on, and if that price point is broken, I'd like to know about it because the stock is probably going to go down. Well, I would click GTC, I would pick out that candle right there, click, click, there's my horizontal alert line. That's how we do it. I'm going to remove that because that is not significant to me. I'm going to delete it. Let's say that I felt this is a beautiful little price compression here, and that if the stock breaks out to the upside, I'd like to know about it because this is a nice, powerful stock. It's been able to rally off the low. It's compressing. It's probably staging for its next leg higher. I want to know when this stock moves higher. Okay, let's click GTC. And I can pick this candle right here, the top of it, click, click. There's my horizontal alert line, good till canceled. I may not be alerted for a month or two, but when I am alerted, it's going to be significant. That's a nice breakout. All of a sudden I get a pop-up, trade dumped right in my lap. Now I can evaluate it and see if I want to get on board. So that's what happened this morning when this alert got triggered on LRN. I knew it had earnings after the close yesterday. I knew it was selling off. I knew that if it got through this horizontal support level, it would probably have follow through selling. So instantly, I got that alert somewhere in here. I shorted the stock. Boom, stock was down. I had a $1 target profit on it. Took my target profit, done. So for me taking an extra 2 seconds to set that alert, it gave me a really nice trade today. So please make sure that you are using these alert lines. I don't know of any other platform that allows you to draw horizontal and vertical alert lines. So let's go through, and I'm going to show you the stocks that I like. I'm going to show you how I found them. And one of the searches that you hear me talk about week in and week out, it's available on Option Stalker, is strong after earnings. So I'm going to go back to the daily chart, and we're going to take a look at one particular stock. I went through this entire list. Now, what I was looking for is a stock that had really nice movement after earnings, but I'm a little leery of the market right now, and I feel that we could get a pullback, but T-Mobile recently merged with Sprint. Took them a long time to get that through the FCC, but they finally did it. Here's the first earnings announcement after the merger, and you can see beautiful gap higher. All right, it's been able to hold that gap very, very nicely. That should be a support level for the stock. You can also see that we have that resistance right there at 111.58, and the stock blew through that prior all-time high. It's been able to hold the gains very, very nicely. This is not a big mover. So this is not the type of stock that, let's say that there's some news related to coronavirus or the economy. This is a cell phone carrier. Even through the virus, even through everything, people are so attached to their cell phones. To me, this is a very safe business. Well, how do you know that? Just look at what it did during the coronavirus. It was a very, very stable stock. It really didn't move a whole lot. So if we get a big market pullback, I'm expecting T-Mobile to hold up very, very well. So I'm going to go into the trade screen, and we're going to lean on this price point right here, that $110 price point. Actually, we saw that it was higher. That's at 111.58. So we're inside of that by staying with the 110 strike price. I am going to sell this bullish put spread on the notion that number one, T-Mobile is going to hold up better than any other stock in the market because it had a very positive earnings reaction and because it's a stable company. So let's take a look at the staged orders. We'll click on trade. Please ignore this. This is a test account. It is a paper trading account. So I was in there testing a few things, and I'm going to go into the staged order entry screen. We got a little housekeeping to do. Last week, if the market had broken down, we had a contingent order to buy some DIA puts. Never even got close. So right here, I'm going to cancel that. So we don't even need to take a look at that. That order ceases to exist. So T-Mobile, we are going to sell the September 18th. So we do have a little bit longer on this. We've got about a month and a few days till expiration. We're going to sell those 110 puts and we're going to buy the 105 puts. So we'll take a look at those and we're going to be doing that for a 90-cent credit. A little bit less than our dollar. There's not a lot of option implied volatility in this stock because it doesn't move a whole lot. And you can take a look at the chart and you can see that. So down at the 110 level, if we bring in 90 cents, we're going to be generating somewhere around a 22% return on the margin that we have to put up on this in a month. In a 0% interest environment, that's a dang good return. And I feel like we're really still playing it safe because the stock is so stable. So I'm going to go in and I'm going to go to the normal option expiration cycle, the monthlies, which is the September 18th expiration. And I'm going to go down to that 110 put and I'm going to click the bid and I'm going to click the ask on the 105 put. And here you can see that the market on that is currently 55 cents bid, offered at $1.28. So we're going to move that down to a 90-cent credit. I'm going to recap the trade. TMUS. We are going to be selling the September 18th 110 puts. We're going to be buying the September 18th 105 puts, and we're going to be doing that for a credit of 90 cents. I think we might have a chance to get filled on it. If we get a tiny pullback in the stock, I would imagine that we've probably got to come into maybe 114.50, and then we've got a chance to get filled on it. Take a look at what the stock did today. You can see it moves around. It moves around pretty well during the course of the day. I think that 114.50, you can see how it sold off a little bit yesterday. Nothing dramatic. I mean, these price movements look big, but they really aren't when you go back out to the daily chart. So, yes, we're going to need a little bit of price movement in the underlying stock. We're going to have the trade on for a month, so we've got time to get into the trade. This order is going to be live until next Wednesday. If anything changes and I want to cancel the order, I'll send an email out after the market closes so that we all have the same opportunity to cancel that order, and then we'll take a pass on it. But for right now, I think this is a really nice trade for us. So I went through this list and I took a look at a lot of different stocks. This is an excellent list. Let's go through, and we're going through an exercise where I'm just going to start drawing some alert lines. And I want to show you how to do that because this is a practice that you should be in. I don't see anything significant right now with EPD, so I'm not going to drop any alert lines. You might want to drop an upward sloping line here if it's breached on the downside. You could also draw a horizontal line here. You've got a double bottom higher low. That's kind of nice, but it's a choppy stock. It's not one that I would want to trade anyway. General Motors, I don't see a whole lot going on there that I really like, but if I would have dropped a horizontal alert line right there across that horizontal resistance, I would have been notified right there, and that would have been a nice entry point. Now, this is the type of stock, let's say that I want to drop an alert line, and I want to know if this upward sloping trend line has been breached. Again, bottom of this candle, click on it. There's a nice little low right there. Click on that one. There's my upward sloping trend line. If that is breached, I have a failed breakout right there through horizontal support, and I have a failed upward sloping trend line. That might be interesting to me. Qualcomm was really nice, and I had contemplated doing a trade on it. You can see I've got my trade alert on this one. So this will just keep following the stock up. It gapped up higher after a compression, and it's continued to move higher. I really like Qualcomm in here. But I feel that if the market pulls back, Qualcomm will probably pull back as well. So I'm day trading Qualcomm. But you could have dropped a horizontal alert line right there when that high was established, and today you would have had an alert. I do like Qualcomm. I was very close to doing a trade on it, but I looked at the option premiums and I was most interested in trying to get below this $100 strike price right in here, because my opinion would be that that gap is going to hold and the stock would find support there if tested. There's no premium in it. The stock really trades with very little premium. That's 15 points out of the money. You've got to go close to the money right now because the market has been gradually drifting higher. Option implied volatilities are continuing to contract. So from a premium selling standpoint, you've got to go very, very close to the money. And that presents a problem for us because if the market does come in, it's going to come in very fast and very hard. And if you're selling close to the money, whoosh, you're in the money. Now all of a sudden we got a nightmare. Now what do I do? Oh my gosh, I think I might get assigned. How do I adjust the position? Do I adjust the position? We don't want to deal with any of that right now. So we'll continue to go through. Rig. There you've got a nice upward sloping trend line right there. And we can drop a line right there. We can drop a line right there. If this is violated to the downside, we're going to know about it. Might set up a nice trade. Continue to go through. Apple. Boy, this one you could get pretty aggressive with that line right in here. Apple has been super strong after announcing earnings. So again, we are in the strong after earnings search. The reason that I like this so much is because you know that the market reacted well to the number. The fundamentals are good. The technicals are good. It gapped higher. It's been able to hold that gap. So why aren't we buying Apple right now? If the market comes in, Apple's going to come in. Plus, I'm hearing rumors that they might remove some of the apps, some of the Chinese apps, and I think there's just some bad surrounding news right now overall in tech, and I think it's a bit overextended. But you can see how this nice tight price action right here lends itself to dropping an alert line. And if you would have done that, click here, you've got that nice tight upward sloping trend line. You get a alert right in here. And that's a decent little short, but you had to be out of it very quickly. Plus, it had earnings coming up a few days later. But there would have been a couple of days shorting opportunity right in here. And in some cases, let's say that it didn't have earnings, this stock might be cracking down and cracking down pretty hard, flushing out a lot of these people who are leaning on that upward sloping trend line. So that's how it works. I'm going to continue to go through, see if there's anything that looks really good here. That's Ford. Yes, there's a nice upward sloping trend line here. If you wanted to be more aggressive, you would draw a steeper upward sloping trend line. And that's going to come into play right here at that horizontal resistance now as support. So it'll creep up there. So if you get a breach there, yes, this stock might be ready to roll over. If you wanted to draw a more passive alert line, then you would start here and you would come here and you could see how it's much shallower. So it's more passive, in my opinion, because now you've got a bona fide breakdown. You're getting in later, but you've had plenty of time to see sustained selling before that upward sloping trend line is breached. Just going to click through now. I think you get the idea. Facebook, you've got a nice one right here. And if that cracks down, it's going to start coming right into here, which is also that horizontal resistance is now support. It's going to keep creeping higher. Yeah, if that's violated, you're going to want to know about it. You could also drop your horizontal line like this. Click GTC. Click right there. Okay, now I got a horizontal line and I've got an upward sloping trend line. That's how you set yourself up so that if the market does get into trouble, the market does pull back, you're going to start getting alerts. 1, 2, 3. You can also do this on a day trading basis, and this is how I manage my trades oftentimes. This is how I find entries for stocks that have pulled back. So maybe I can find one of those examples. Actually, I'll do that in the chat room and in the daily videos. I won't do it right now. So HBI, look at that. Beautiful compression, beautiful breakout. Yes, that's a nice support level that you can lean on at $14. No premium. So I think you get the idea behind all of this. And some of these stocks have just gone parabolic like that. We can't touch OSTK, PBI, can't do it. PG, the market pulls back, it's going to pull back. That's the problem that I had finding trades today, was that a lot of these stocks have run so hard that any market pullback and they are going to get into trouble. PINS compressing, but holding that gap right there. So that's how I found TMUS. FSLR actually had a nice upward sloping trend line too that can be drawn. GTC, click that low, click that low. There's your upward sloping trend line. There is your horizontal resistance, now is support. Yeah, if 6250 is violated, then I think you've got a decent opportunity to short that stock. So let's continue to take a look. I'm going to go into custom search, and I'm going to show you a search that I ran to find my next candidate. Pop Bull is typically a great search to use to find candidates. That's going to be fantastic for swing trades. I had buy into earnings, had some interesting candidates to it, and I had considered doing some trades on this, but they're announcing really, really close, like in the next week or so. So I only had this Friday's option expiration. But as you know, these stocks have a tendency to rally into the number. And HD had a nice breakout, low, nice breakout. Any market pullback, though, after running hard, these stocks are going to pull back instantly. So that was the other problem. But you can see on NVIDIA, we've got a really nice upward sloping trend line here that we can draw. And look at that nice, tight price action that we have. If this trend line is breached, that's horizontal support right there. It was resistance. Now it's support, comes into play at about 420. Now we've got this upward sloping trend line as well. If that 420 price point is breached, yes, it's probably going to crack down. We can drop that horizontal alert line as well. Click on the bottom of that, double click it. It's going to auto extend for us. So yes, those are two important alert lines that I've just drawn for it. But NVIDIA does look very good. Graphic chip makers look very good. PDD, I went through that. So I didn't see anything here. Again, these were all announcing earnings within the next week. So Walmart, if you wanted to get super aggressive at that 129 price point, it has a tendency to move higher into earnings announcements. So that would be a super aggressive trade though. And I'm not looking to do that with the swing trading videos that I produce on Wednesday nights. So I went into custom search and I was looking for something in particular. Now we can search for stocks that are near the 52-week low. We can use this percent 60-day range. I also took a look to see if there were any stocks that I wanted to trade that were under $20, thinking that maybe we just buy some stock that's grinding higher. That would be possible as well. But we have to have options with decent liquidity. So we're going to go to a option liquidity of 1 right here. And then I'm going to use a rather unique search, and some of you have been asking me about this as well. I'm going to go into bearish climax long term, and I'm going to scan, and I'm just going to see what comes up. And so I went through these stocks, and I'll be looking for a stock that is strong relative to the SPY and that has this bearish climax long term. What the heck is that? Let's run the scan. Now, in Option Stalker, you have the ability to search for this criteria, but you won't be able to see the 1OP indicator. And this is based on a bullish divergence in the 1OP indicator, and that is like throwing fuel on the fire. And so in this particular case, you can see how Walmart's actually pretty good. Down, 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 down. Price compression is horizontal. When I have these two combinations, that would be considered a bullish divergence. And so now I'm going to go through these and we'll take a look at a couple of them. Let's take a look at Disney, for instance. That is a bullish divergence. Disney came out with earnings right here. Look at how the stock ran up and is continuing to grind higher. I'm going to take off the last candle because everything's updating right now after hours. We're seeing a duplicate candle on a daily chart here. That will correct itself shortly. But you can see how the 1OP indicator for Disney has been falling precipitously, and now it's at a bearish climax. Well, when you get this kind of free fall in the indicator and that kind of price movement, you know that it's a bullish divergence, that there is super strength in that move. So that would set up well for selling an out of the money bullish put spread. Now, Disney's in the travel and entertainment industry. It's got a lot of exposure to coronavirus. The theme parks are just starting to open, movie theaters starting to open. The gap higher was a better than feared relief rally, in my opinion. They had their streaming service has over 100 million users now. That's what fueled the move higher, but it has been able to hold those gains in a very bullish market environment. What happens if the S&P 500 cracks down 100 points or 200 points? I think they're going to come hunting for a stock like Disney. So, and I could use that to my advantage, that opinion, and I could say, hey, if it takes out that horizontal support level after that earnings gap is going to fill this gap in, I think I'd like to know about that if it happens. So you click GTC and you drop your alert line. So we're going to go back to this because I am going to show you a stock that I do like that's on the list. Right there, AZN. I am looking for something that's super, super boring right now because that's what the market is. Very boring. I want a low risk trade. And if I take a look at the chart, I can put up my major moving averages, see where they come into play. Always important. Right here, you've got very, very tight compression. You've got that $52 level right there where the 100-day moving average comes in, along with 1, 2, 3 horizontal support points. Plus, we've got more horizontal support lines just above that price point. I like it. So again, that comes into play right around 52.23. Plus, we know that AZN has invested in a number of biotech companies, some of which have some really, really promising coronavirus vaccines. Well, if one of them hits, it's going to be good news for the company. And right now, everybody is completely focused on the coronavirus. So if the market sold off hard, I do not believe that AZN is going to sell off hard. By the way, they feel so confident in one of their vaccines that they are already producing 3 billion doses. 600 million of those are coming to the US and they'll be available by the end of September, beginning of October. They have not even gone through their clinical trials yet. Boy, is that confidence. They are that confident in their drug. So if they're that confident, I've got to share that optimism. I certainly will share it for the next month. So we are going to go back out to the normal monthly expiration in September. And I'm going to go to the staged order entry screen so you can see what we're trying to do here. In this case, we're going to sell the AZN. Those are the September 18 5250 puts, and we're going to be buying the $50 puts. And you guessed it, we're going to be trying to do that for a 50-cent credit. I think we're going to get filled on this one right away tomorrow. We're going to be hanging on to it for a month. If it's successful, we're going to make a 25% return on it. That's a nice return in 4 weeks. So I'm going to click on the 5250 puts here, Click on the bid. I'm going to click on the ask of the $50 puts, and you can see that that spread's currently coming up, 45-cent bid, offered at 60 cents. I think we're going to get filled on this one right away tomorrow, and it's okay. I like this trade. I think this one will work out well for us. Again, I think this is a relatively conservative play. We've got multiple support. You have this downward sloping trend line right here that's been violated to the upside. So the stock looks like it's ready to get going. Good. Run higher. Give us some more breathing room. Plus, we've got this horizontal support level right here. Plus, we have another horizontal support level right here. Plus, we have another horizontal support level right here. And that coincides with that 100-day moving average. It's all about probability right now. This is a super, super low probability trading environment because the market doesn't know what it wants to do. Well, it does know what it wants to do. It wants to rally. It wants stimulus. It wants Congress to approve another $1.5 trillion. And I'm a little surprised that the market's been able to shoulder that news as well as it has, because PPP is going to be running out. Small businesses need that aid. They're going to have to start laying off people, in my opinion, because I don't think that the coronavirus is going away right away, and the states are still in phase 3 for the most part, and it's going to be a very, very gradual recovery. So without that stimulus, I think that you're going to start seeing layoffs, and we need to keep an eye on the initial jobless claims numbers that come out Thursday mornings. There's one coming out tomorrow. Hopefully, it will drop below 1 million, but anything in the 1.2, 1.3 million initial jobless claims, I think that's problematic, and I think that's the type of information that the market could sell off on. I'm not looking for a nasty, huge market decline right now, but I am looking for a reasonable pullback. I think a pullback to that SPY 325 level is very, very possible. If we get that pullback, we're going to have a ton of stocks that all of a sudden become much more attractive to us. So that's what we're going on right now. And until we get a pullback like that, we're going to keep our trades to an absolute minimum. I think we're going to get filled on AZN this week. I think TMUS, we may have a decent chance of getting filled on that. We've got plenty of time to try and get filled, so all we need is a little bit of a dip in the stock, and we'll be in business. That's all I've got for you this week. I wanted to keep it short. You know, the underlying premise is that if you're swing trading and you've got a longer term perspective and you're not able to watch the market during the day, this is a great time to just be on the sidelines and be in cash. When we're pressing it, we're making 25% returns on these trades, and we're doing it 3-4 trades every single week, and we're just crushing it and crushing it and crushing it. Well, when you make that kind of money and you make those types of returns, and we're talking about, for the most part, our spreads have been making 25% returns over a 2 or 3 week period. When you have that type of risk reward profile, that means that you are taking a lot of risk. Well, the reason that we're taking a lot of risk is because the market was setting up well for us. The probability of success was there. The stocks had not fully run their course. We're getting lots of great technical patterns and setups. We're not there right now. You can see in the chart, technically, tiny, 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 tiny little bodied candles. That suggests resistance the whole way up. If I take off this 1OP indicator, you'll also notice, look at the volume in the market. Down, 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 minuscule. Light volume rallies like this indicate a low level of conviction. Gains like this can be stripped away in 1 day, very, very easily. All you need to have is for Congress to go into recess and say, forget you, we'll see you in September. We're not doing anything with any kind of stimulus bill. News like that would definitely crack this market down, and you would have bullish speculators getting flushed out in the first wave of selling, and then you're going to establish support. Instead of worrying about positions that we have on, we're going to be looking for opportunities and establishing new positions. So that's where we stand right now. I hope that the information I provided to you tonight on the alerts resonates because it's such a great tool. You know, I'm looking at the SPY right now, and if you go back a few weeks, you can see I had an alert line drawn right down here, and you see how tight that pattern was on that sell-off. And as soon as we broke out above it, I was like, okay, that's nice. We've got a chance to rally up. Now that we've pulled back a little bit, this is a nice little breakout to the upside. When you see something like that, just draw the line, GTC, you get the alert, you don't care about it anymore, minimize that pop-up and move on. But these are really going to help you, especially if you think that there might be a bearish setup coming. When you see these nice tight uptrends, draw the line, you'll get the alert. That's all I got for you tonight. If you like this video, please give it a thumbs up on YouTube. If you're watching it on YouTube, you're getting it 2 days after members get it, but that doesn't mean that the educational content is not of value. I've shown you how to find these trades on your own, and because we're selling option premium that's a month out, these trades are probably still going to be viable when you watch the video. So please subscribe to the YouTube channel and turn on your notifications so that you never miss one of these videos. Thanks, everybody. We'll see you next week. By the way, I'm going to do my video next Tuesday night instead of Wednesday night. I'm taking a little bit of time off. I think that's what all of you should do. The trading volume for the next 2 weeks, 3 weeks is going to be very, very dull, and we're going to see just a lot of choppy trading in a low volume environment. Thanks again. Have a good night. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.